Strategist at MarketGauge. Michele, thanks a lot for joining us. Tell us about the January trend trade that you'll be watching for early signs of market sentiment and direction.
Well, first, Happy New Year, Paul, and thank you for having me on. So, yeah, I mean, what's really great about this January trend trade is that in a new administration year, it is statistically even more powerful than it is when it resets every January of every year. And that's because what you'll see is a trading range established within the first 10 trading days of January. And what that does is it really tells you what the anticipation is if it breaks out of that range or if it breaks down below the range or whether it just stays sort of choppy in the middle. And so with a new administration, with all the uncertainty, as you mentioned at the top, we can see, will tech break out of that January range? Will that still be the place to go? Will we see a broadening of the market going into small caps or transportation or some of the areas that haven't done as well, healthcare being another? Or will we actually see a disappointment to get started and will break down, in which case, then it will be the sort of sit and wait for the bottoming signs for an opportunity to buy, because we'll probably see the Fed more active than what they said they would be.
I've read your notes, and if I understand correctly, you think January, and in fact, perhaps all of Q1 could be a difficult one for markets, correct?
Well, you know, we don't really love uncertainty in the markets, and it is interesting because we've seen calls for 7,000 in the SPY by the end of the year, 4,000 for some people, and that's why we really like to look at these ranges. But yeah, I mean, we don't really know with a new administration what's going to happen with deregulation, with tariffs, with deportation, with taxes. Will they be able to do that? Will they be able to cut the government spending? And if they do, will that be more recessionary than what they anticipate, considering a lot of the GDP has been government spending over the last administration? So I think we have to kind of have a bit of a patient attitude.
You do like the setup for commodities, though, and in particular, silver. Let's go there.
Well, silver has both an industrial use, obviously, and then also a use in terms of against inflation. And so, you know, I just mentioned recession. I'm not saying I'm calling for recession. I'm saying that's a possibility. But another possibility would be more of a stagflation environment. And that's really kind of where silver would come in. Right now, it had a great year in 2024, even though it sold off from the highs. But it's holding above really around $30 an ounce, which means that all it would take is one boost, whether it would be a dovish Fed, the dollar turning down, some kind of geopolitical uncertainty, or growth even coming out of China potentially to drive silver back up over 32, and we think it could see maybe $40 or even $50 an ounce.
What's your take on the prospects for copper and crude oil this year?
Well, crude oil, by the way, is sort of a surprise here. It's actually trading the highest it's been for a couple of months, I think, since October. And everybody was bearish, as you know. So there's a classic example is don't listen to analysts. Really try to understand how these things work with ranges, moving averages. That's what we try to teach. But in the meanwhile, right now, 75 probably will be some resistance in crude oil. But if it can get through there and get through 80, I mean, what does that tell you, right? Not only were all the analysts wrong, but this whole drill, baby, drill may not necessarily drive the prices lower, could hurt consumers. As far as copper, if, again, I think very interest rate sensitive here, if the rates don't necessarily rise like they were doing over the December time after the Fed meeting and they start to turn down, there's still a lot of need for housing. People have stepped back from buying, although new sales have not been as bad as one would think. And that could really help copper. And China, of course, would be an X factor in copper as well.
Okay, let's go to some stocks that you like. One of them is Salesforce, ticker symbol CRM.
Well, I really started paying attention to that stock in July during the Olympics because they were a sponsor of the Olympics. And so they were in their commercials. We're talking about AI. So that's set me off to do some research. And yes, then I saw them on Christmas Day with Netflix doing football, American football. They also were a sponsor of that too. So I thought, okay, they're spending a lot of money to get this message out. So they're really working on AI for customer service, data mining, all of that stuff that really could help that company grow. And right now, the stock has been, somewhere in the $300 range. I think it has the potential to go to 500. I will, going back to my very, very first comment, your very first question, sort of say a little patient. If you're already in, that's one thing. But if you're waiting to get in, I would still wait for that January trend change to see if it can break out of those January highs.
Okay, I believe you also like the setup for a blockchain-oriented ETF, an exchange-traded fund that trades under the ticker symbol BLOK.
Yes, I've liked that for a long time now. And so essentially, if you want to have exposure to Bitcoin, which we can see now is starting off the year well after having kind of a rough sell-off in December. Blockchain doesn't have that kind of volatility. It's the technology side, digital ledger, supposedly incorruptible. Of course, anything is possibly corruptible, but we can get into that another time. But in terms of the stock itself, I do think that it's the future. I think it can really benefit. It went up over 50. It kind of came back down around there. So I'd be looking again, January trend change. If that breaks out, I'd follow it.
Okay, why don't we follow finish with Rivian, the electric truck maker. You like that one as well. It had a rocky 2024, and in fact, if you look at the stock on a multi-year basis, it's down in a big way from its all-time highs. Why do you think 2025 will be better for Rivian?
Well, it had some good news stories in 2024, the affiliation with Volkswagen. It got some government money. But I also think that Rivian itself, by the way, got a great review in Car and Driver. I've been seeing from a consumer instinct more of them around. They're trying to do a lower priced, smaller version of their truck, possibly get into the sedan business, but it's made in America. And that's really what appeals to me, because it almost will be maybe an antidote to Tesla with Chinese tariffs and whatever goes on there politically as a means of buying an electric car or electric truck in this case that actually will get support by the Trump administration, not necessarily the company, but the idea of made in America. And I do believe EVs are going to be a thing, not necessarily the way of the dinosaur like gas cars will eventually be.
Michele, thank you so much for this conversation, and best wishes in 2025. Michele Schneider.